great deal of press and attention that's going on to China and entrepreneurship these days, and depending on who you talk to and their perspective, some consider it either the hottest opportunity or an overheated bubble. I'd like to ask each of you just to kind of give us a frame of reference on your perspective on entrepreneurship right now and what's happening there. Could you give us 3 words that you would use to describe the current situation and why? Kevin, let's start with you, please.
3 words I'd probably use are cooling, promising, and exciting.
And could you say a word about why each of those, please?
I think China is not immune to the global economic situation. There's been a number of layoffs and companies shut down, primarily in the factories and the ODMs. The expatriate community in China, and particularly in Shanghai, has been hit very hard as well as companies cut back as well. But GSR, which focuses on early stage investments, we still see quite a bit of activity, but I have to say our investment pace has slowed down quite a bit. As far as the promising and exciting part of it, I mean, there is still so much that is yet to be told in China in a number of different sectors, which I think we'll go into later on. And in addition, the Chinese government has stepped up. I mean, with strong foreign exchange reserves and a focus on investing in infrastructure as a stimulus, I think a lot of the companies, again, in the sectors that we'll talk about, are going to benefit from that as well.
Great, thank you. David, what 3 words are you going to choose for us?
Kevin already picked the 3 best words to describe it. I'd just say, beware, promising, and think long term. Beware only because already Kevin alluded to the fact that, it's rising tide lift all boats, and the tide is not growing as fast anymore, or is not as rising as fast as anymore as in the past. So you just have to be a little bit more pickier. But the promise that China had, 5 years ago, 10 years ago, it's still there. But you got to also think long term. In particular, I think a lot of entrepreneurs in China wants to hit it big fast. And I think there was a time and place for that. But, those days are kind of being numbered. And so you have to have a little bit more long-term perspective on how to make money in China.
Okay. The 3 words that came to my mind were star power, nimble, and then grassroots. The entrepreneurs had quite a big successes in the last 4 years, and they're held as stars on national TV, and that was a very popular TV program among young professionals. Nimble, pretty much the way the entrepreneurs in China doing business is very different from here. They can start small. They're doing a lot of bootstrapping, so they're very nimble. By grassroots, I mean the most profitable area. Actually, many of these opportunities are in non-high-tech areas. So there's a grassroots movement in entrepreneurship in China.
Great, thank you for adding it. And David?
The 3 words I can share, they are brave, cautious, and also innovative. I think no matter whether in good time or bad time, I think to be an entrepreneur, need to be very brave to take on those potential risks, etc. The others will be cautious because in this, the economy difficult time, it's very precious to preserve those cashes and also try to figure out what's the best way to make sure the operation will be very efficient. And the third one is innovative. I think always good time, always a good company, great company could be founded in a bad time, right? So I think at the global level, we still have major issues like environmental issues, green technology issues, etc., medical issues, educational issues, whether in the U.S. or in China or in India. So I think we still demand a lot of, at the global level, demand a lot of innovation to come out so that can drive the whole mankind to move forward.
Great. Well, against this backdrop of what might be happening in the overall market, Let's dive in and talk about some of the areas that you think are most interesting, either by industry sector or by region and location. As we all know, China is not a monolith, and it's developing very differently depending on where you are. David, I wonder if you would start with identifying some of the areas that you think are most interesting and where we're seeing some value, especially in this time of retrenchment across the globe.
Sure. I think in China, the economic slowdown has definitely hit, and there's no question that big-ticket items, export and manufacturing has slowed down. But really, middle-class consumer spending for small-ticket items continue to grow. And there are sectors like social networking, mobile gaming. These three areas will still continue to be very, very strong. In particular, China is unique in the sense that online gaming is actually a larger industry than the advertising market. No other country that's the case. Furthermore, gaming is merging with the social networking side. And so what's really interesting is I think in many ways China's internet market has always followed as kind of a replica of the U.S. or the Japanese evolution of the internet market. But going forward, I think it's going to be quite different, and they're going to be very unique plays. And so I think that any of those convergence areas of those three are going to be quite interesting, and there's still a lot of opportunities, in particular because the infrastructure and the paradigm is shifting where mobile phones are going to be more open going forward, and also the whole paradigm of email is going to disappear because either simple games or social networking becomes really the window into the world for many folks. So I think that's an area that's quite interesting, and I don't want to hog up the whole time, but other areas I think in China continue to be exciting are some of the clean tech plays, as well as although semiconductor is going through a major down cycle, there is no question that if there's any sector where technology is going to sprout out of China, is probably going to be some of the next-gen semiconductor companies, because the best and the brightest from the U.S., some of them are moving back to China. Whereas other sector of technology, there's still a lot of catch-up because the labor market's not as fluid in those sectors.
Great, thank you so much. Others who would like to add some perspective on that?
Sure. In the interest of time and trying to get as much information out as possible, there's a lot of things about David's comments that I would echo in the semiconductor. So just two comments about that. One, China has just assigned or let some of all of the 3G licenses. So there's going to be a large infrastructure investment in 3G, and that's going to be used as a stimulus for whether it's mobile applications or semiconductors for new cell phones or things like that. The openness that David talked about for the platforms is also going to be there. There's going to be a Google equivalent phone in China, actually based on Android, so that's going to help open things up. And so the iPhone type of growth that we've seen here in popularity is going to happen. Just for you people that are interested in U.S. entrepreneurs too, on the mobile side, China and Europe have tended to lead in the mobile area. I'd say for the first time with the iPhone and the App Store and things like that, that's the first time that the U.S. has really sort of led on it. But there is some cross-fertilization that can take place here as well, so I would just keep that in mind. On the clean tech side, it's interesting in China. We've seen a lot of materials deals, recycling and things like that are very interesting. On the materials side, LEDs we consider to be clean tech, very similar to semiconductor type investments, but there's some innovation happening in the LED segment. Sometimes reinventing the way things have done before to do them better, and in some cases completely clean sheet new technology that's originated from China. So we're excited about that. I think the mobile side is probably the most interesting, and we're also looking at the financial services sector because that's growing in China as well. It's had a setback because of the global environment, but the financial services sector for the broad consumer, whether it's insurance and financial services and banking and mortgage brokers and all the stuff that we're used to here that actually probably have bad names are actually in China. There's some interesting things happening there as well. Two areas which we're not involved in but we're monitoring, I would say, is also healthcare. There's a large push by the Chinese government to get the number of covered individuals in China higher. I think the number is around 30% now of that are covered, and they want to increase that, of course. There's a privatization of hospitals that are going on, and there's also a push by the government for more investment in biopharmaceuticals and things like that. And then finally, the area that I think is interesting too that we also are not tracking as much, but sort of keeping our eye on is in the whole area of on the clean tech side of water and things like that. Water is a big issue in China, and as we move away from the traditional, it's not that old an industry, photovoltaics and wind power and hydroelectric, which are popular in China, water quality itself is a big issue for China. That is, we're looking for interesting things happening.
Great, thank you. David, Chen, and Frank, I would like to start with you two for the next question, which is, we've talked a little bit about the companies that have been started with a sort of Me Too business model or technology, essentially borrowing or making slight modifications to company business models or technologies that have been available in the U.S. or globally. We can think of Alibaba and its counterpart, or Job 51 and so forth. But now we're seeing that the tides change as the capability and real innovation is happening not only on the technology side but also in business models. Can you talk a little bit about innovation that might be coming to the forefront in China or moving from China globally? Frank, can we start with you, please?
Sure. Yes, I think I still see a lot of that happening, copying the technological advances, all the business model innovation from the U.S. to China, because the mentality in Chinese entrepreneurs still are they want to reach profitability fast. So that's more a type requirement in China. So we are still not seeing a lot of patience from investors to wait for a few years for deep R&D. So I think most of the innovation are still coming out of the Silicon Valley. But I would say in areas where the government have strong support, we are seeing the innovation coming out first from China. For example, the digital TV initiative. There are two universities in China, Tsinghua and Jiao Tong University. So these two battles kind of also both Kevin and David mentioned 3G. So the TD-SCDMA was supported by government for many, many years. And the government actually, they intentionally delayed the foreign 3G equipment vendors to wait for the TD technology to mature. TD still has not matured yet, but the government is very adamant in having its kind of the Chinese kind of rooted technical innovation. So that's my view.
Great, thank you. David?
Yeah, our company actually is in a business to work with a lot of technology companies, especially helping them on the product development side. Around 60% of our total revenue actually is contributed by what we call outsourced product development. So we work with a lot of Silicon Valley companies such as TIBCO, Oracle, etc. I think what we are seeing today actually, also based on a discussion with some of our clients like Cisco, basically those globalized companies, they want to leverage resources across the globe, no matter whether it's in India, in China, in the US, try to tap into the best talent and then come up with the innovation at the global stage, at the global level. So I think that's what's happening right now. It's not really tied turning one end to the other end. I think it's cross-turning. That's my view. Thank you.
We see the open innovation networks and the shifting capabilities. All companies really need to leverage talent wherever it is. Any other additional thoughts on the direction or sources for innovation?
I just would say that as part of the economic downturn, I mean, you've heard the government mentioned many times. The government obviously has a strong influence and continues. From what we've seen, as part of China's economic stimulus, technology and encouragement of technology, whether it's through loans, whether it's at the central government level or whether it's provincial or even city level, is very, very high. And both for reasons that they were sort of before the economic crisis, which is trying to spur economic development outside what I call the veneer of Shanghai, Beijing and Shenzhen. Sort of the tier 2 cities have always been trying to do that with their science parks and with the funding. And that has only increased with respect to the economic downturn, and the government sees this as a way of sort of killing two birds with one stone, getting technology innovation and the creation of a technology base in many different areas, and on top of that, using it as a stimulus to get the economy going again.
Thank you, Kevin. Let's talk a little bit about the role of government and perhaps some recommendations or suggestions you might have for entrepreneurs and how they interact with government, whether it's on the local or national level. Government has a stronger hand in China, and which can be very positive for standard setting or investment or signaling. But I remember just recently I was interviewing CEO of a startup in Beijing, and he was saying that one of the most difficult things he was facing as somebody who had been worked primarily in Silicon Valley and was now working in Zhongguancun was that he said really the government was sort of his unofficial chairman of the board. What advice do you have for entrepreneurs as they need to forge productive relationships with government? Some specific tips.
Just a couple comments on this. One, try to avoid them. I think sectors and businesses where you have to interact a lot with government is typically not the best one for startups as entrepreneurs. They tend to be quagmired, and getting licenses are difficult, etc. And these tend to be very strategic areas that the government cares about, which is areas like auto, financial services, energy areas. Now, if you get those licenses and can work with it, that's great, and that becomes a barrier to entry to your industry. But for most startups and entrepreneurs, you're better off avoiding these areas that the government breathes down on, and you're free to swim. You don't need to deal with all the fuss. Now, having said that, going back to the question, how do you deal with the government? I mean, one of our pharma outsourcing company recently just got a government grant of $5 million, and the company now is fully funded. Didn't have to raise another round. So there are benefits to working with the government, and if you're close to the government, sometimes they offer you the best location in certain new development areas. You get big tax breaks. Many of our companies who are technology focused typically get 3 to 5 years of complete tax haven because they have a good relationship with the government, and they locate their offices there. So there's the pros and cons, but on a net basis, if you're going to go do something, just do a business where you can avoid the government as much as possible, because they could be extremely unpredictable, and there's a lot of skeletons in China where the government has ruined many startups and companies because of a variety of reasons.
So I probably would take a pretty different view, and part of it is just because of the difference in philosophy between GSR's approach and David. I mean, if you look at the interesting industries, advertising, internet, which is basically media, and media is highly sensitive in China and monitored, to semiconductor and clean tech. I mean, these are important strategic areas for China. It's really hard, and also too in mobile. The mobile, essentially, whether it's the government or China Mobile, I don't care what you say is the government, not the government, But very similar to the cellular companies and the wireless carriers here in the U.S. I mean, the cellular companies in China are very powerful, and it's hard for a startup to maneuver separate from whether it's government or not. But you have to deal with other people in the ecosystem. I would agree with David actually on one point though, is if you can avoid those, great, you should. But it's really hard to avoid them, and especially when you get into media and things like that. So. But I'll just give you a sort of a difference in approach. I mean, the Chinese equivalent of YouTube, of which there are many, so I'm talking about them collectively, not an individual one. About 6 months ago, they ran into trouble because they were taking a very YouTube-like approach with respect to content, and in this case, content was less about licensed, non-licensed, but content with respect to other types of material that the government took offense to, and basically shut them down. And, if you want to call that unpredictability, I would actually say it was predictable, but they decided to take a YouTube approach to it, which said, just hell with it, we're going to make it very popular and grow, and then we'll deal with the consequences later once we're larger. Well, in China, that doesn't work quite as well. So when you fly in the face of things like that, I think you're asking for trouble. And most of the groups have, through negotiations and through promises to do things differently, have, come back. So they're okay. But that's the nature of the types of things that you do in China. So I think it's hard to avoid that. And so therefore, to try and bridge where David just talked about and where I am, if you can do a startup without doing anything that involves the government, do it. But if you do something that involves things with the government, you would only do so at your own risk and with people that know how to navigate the system. And not knowing how to navigate the system, which means relationships with government officials, constantly talking to them, understanding where the policy is on a very, I couldn't even begin to do it. You have to be on the ground in China, with experience on a network there before you can do that. And that goes for mobile applications. It goes for, media, like I said before, whether it's advertising or video or things like that, or content. Finally, there are different levels of government assistance. There's been at least 2-3 local government visits through the Silicon Valley recently, where the mayors of the cities have come through and said, basically, please locate in our city. We're creating a solar city, et cetera, and we'll give you free buildings and land, and et cetera, things like that. Those kinds of things are a little easier. They don't go against policy, but they are there. It's like business development dollars or economic development dollars that they're offering, and those are available. We have a company that's doing a solar cell factory, and we got offers from 3 different provinces about tax incentives and land and building incentives in order to base the factory in that city or province, as the case may be.
Yeah, this is also a very, very interesting topic for us. We have our experience with the government. We have both good and not so good experiences with the government. We build wireless networking equipment. We know going into this, we have a big R&D and sales and marketing branch in China. We know that if we deal with the government, things will be slow. It will take many years, but the potential benefit down the road could be huge. So we intentionally split our business into 2 parts. One is vertical, which kind of feed the family. And then we start to win carrier deals. And the carrier deals, Chinese carriers, they can be viewed as state-owned enterprises. They belong to a supreme ministry called the State-Owned Asset Ministry. So basically, a super ministry that controls all the state-owned assets. So the regulatory rules from the government is, I would echo David, is quite unpredictable in both the extent and its content. So you have to be very patient. But once you have the right relationship, and this could, to your great advantage, you have to have the local partner, you have to have the good contacts. Sometimes you need to kind of do things that grease the wheel, but don't do it yourself. Use the distributor to do it. But you have to do these things. Once you have the connection, and then that could be a huge competitive advantage.
Yeah, I think probably the question will be dependent on how big is your company, what stage company are you in, and also what kind of vertical you are in. So use our company as an example. We were a small company, actually. We didn't deal with the government at all. We also kind of hide away from government, because since we only work with global companies in US or in APAC regions. Okay, but as we are growing to be a sizable company, today we have almost 6,000 people in China, right? Software engineers, and has also become a public company, publicly listed company in the US. So it become high profile, sort of high profile in China. Then we have to deal with the government, actually at a different level, at the central level, including like NDRC, China National Reform Development Committee, and also the ministry, very powerful government agency called Ministry of Commerce. Basically, they're dealing with all sort of M&As if you want to do cross-border transactions, etc. So recently, we hosted a pretty high-profile government officer, deputy vice premier, actually, Wang Qishan, to visit our company. And then also, he's not only in charge of all the financial system in China, but he's also in charge of all the tradings. He's the guy that deal with the U.S. government during the previous administration, Bush administration. I think after that, he did a pretty thorough study about our industry, and because the government perceived this industry as a way to increase the employment opportunity for college grad. These days, China every year there are 6 million students coming out of college, and then the unemployment becomes the headache for central government. So that's why they are studying our industry and to see whether can promote this industry for the global clients and also for domestic Chinese large state-owned enterprise, so that they can absorb those newly grad students. And also those municipal government or provincial government, they also trying very actively to attract our company to set up operations in certain regions. So I think in the past 2 or 3 years, I think we have been quite successful dealing with those government agencies at the different levels, and contribute our business quite a lot. For example, at the central government level, they really can formulate the policy, and then some of the suggestions we gave to them, they really took it, and now they are kind of sort of like pushing all those large state-owned enterprise to work with company like Vansinfo to help them outsource part of their IT operations, so that it could be more cost-effective, at the same time create job opportunities. Okay.
This is why we invested in David when he didn't have to deal with the government.
That's right.
When you're smaller, just avoid it.
Yes, yeah. You don't want to be defocused.
So important distinctions about what industry you're in, what stage of development, and so forth, but helpful tips and perspective for how to either work with or avoid the government. Panelists have talked about the role of government, and here in Silicon Valley, the government does not have a strong direct role, more sort of setting the rules of the game. Our ecosystem here is well known to all of us with venture capitalists, the university, a whole host of important players that create this sort of ecosystem for entrepreneurship. How would you compare what's here and maybe some of the first-tier cities, whether Beijing or Shanghai, and the entrepreneurship kind of environment there? What would be the important distinctions that you would make for somebody who's had an experience perhaps here and wants to be an entrepreneur in China, and not just in the first-tier cities, but perhaps moving out into some of the second or third-tier cities? Who wants to go up to bat first on the question about the overall environment?
You mean about the ecosystem?
Ecosystem.
In China?
In China.
I think compared to 10 years ago, it has drastically improved. We started investing in 98. There's probably maybe 1 or 2 law firms that was able to really help startups, and I would say very few auditors even knew the difference between China GAAP and the U.S. GAAP. And so I think 10 years ago it was extremely difficult, and the ecosystem was not there. Today it has significantly improved. There are very good legal counsel and counsels that focus on startups. accounting firms that really understand the needs of a smaller company, but a smaller company that's really poised to grow as opposed to remain small. There are areas still where the ecosystem lacks compared to Silicon Valley, and it's around venture debt, for example. There is no Silicon Valley bank or Comerica that will provide venture debt. They're starting to do it, and they claim they do it, but they're very conservative. It's not like in the U.S. where a venture debt provider, if GSR or DCM backs a company in the U.S., they'll give you a credit line. In China, it's very difficult because banks are still used to balance sheet based lending, and I think that hopefully will change, and it should get better. But it's still lacking. And then I think, in terms of the venture industry, I think, 07, probably between 05 and 07, we've kind of seen a mini bubble. There's been a lot of money into the system and a lot of folks going into both non-tech and tech investments. And I would say that from the perspective of getting value-adding venture capitalists, the system is still probably not as mature as the U.S. because a lot of people who flooded into the business the last couple of years are, ex-bankers and ex-consultants from the financial industry who thinks of venture as, another source of financing, as opposed to people, like Kevin or I who go into companies and the boards and try to help them out. And so I think that's still in process, and that's kind of the current state of the ecosystem there.
I guess I could address that as well too. So I had the opportunity to take advantage of David Spade work and the Walden groups, and those were there before because we started in 2004 investing in China, and so seeing the sort of the professional services and things like that. When we started there, those were up to speed, and that was great. In terms of the ecosystem, though, I would say that there's a couple of things. I mean, there's no lack of entrepreneurs in China. There's no lack of good ideas, and there's no lack of enthusiasm and optimism, which is the first thing I noticed about China versus the Valley in 2004. And so that's great. I would say that looking at 4 years, 5 years from when I first entered China, there are still a couple things that sort of stand out. First is the lack of management. Experienced startup management is hard to find. It's hard enough in the Valley to find, but it's even tougher in China. It's still hard to find good financial people in China. If you're a very mature company trying to find a CFO, if you're fortunate enough to be pre-public, finding a great CFO is still a really difficult thing to do. Systems and processes internally to companies, whether it's financial or other things, tend to be less structured than in the Valley because there's been no history, there's been no understanding, or there's been no sort of role models of how to do that before. I would say, on a promising note, though, that the generation of the mid-'90s companies that have been successful, you're starting to see people that are starting companies that had successes in some of the early Chinese companies, like the Sohus and companies like that as well. So you're having an interesting base of both angels and managers and people that have had at least one experience in a startup. I would say that retention of people in China employees is a very difficult thing. It was worse 12 and 6 months ago. It's less worse now for obvious reasons. I remember when Google opened their facility, or in this one place in Beijing, there's Intel and Cisco and Google and Motorola, and all the entrepreneurs in China used to laugh about the fact that Google was essentially the training ground for their next employees, and that certainly was the case as well. So employee retention and consistency within companies continues to be tough. I think the current economic environment will help solve that a little bit. But at one point last summer, or even the beginning of 2008, in certain companies in Shanghai, you had turnover rates that were measured in the 20% area, which is not not a great one. I'd be interested in what David and Frank have to say if they're willing to share that with us, because I don't think you can sustain any company in any region with a 20% turnover rate, and so the fact that that's come down now is certainly good.
Very good. Thank you for adding it. Would you like to comment on the role of HR, attracting, training, retaining, talent?
Yes, certainly. That's actually a daily challenge for us. We are somewhat fortunate. When we started the company, we set a rule that we do not recruit from the very top university in China. Because, for example, I came out of Tsinghua University, and most of the Tsinghua graduates, they jump around in job hopping. Also, many of them come to the U.S. to study for graduate degrees. So we know what kind of new grads would likely to stay, will be more stable. And then we try to convince them that this is a place that they could have good career advancement, because we have senior technical people from the Silicon Valley, and we took our time to train them. And also, we try to have personal bonds with them. My home is still in Silicon Valley. When I travel to Beijing, I spend most of our nights kind of entertaining my team, okay, taking them to dinners, sometimes kind of to drinking sessions, so to have this personal bond. So that way, this is unique about the Chinese population. Once you have a personal bond, they would hesitate in switching jobs. In 2007 and 2008, Kevin mentioned Google. Google actually just totally created chaos in the job market. They bump up the salaries so much, and it's very hard to retain the employees. We have to bump up salary from 2005 to 2007, probably more than double the salary. So fortunately, we have a very low turnover rate, less than 5% in the engineering team. But sales, marketing turnover is very high. So, and then this economic downturn sort of helped us, but we hope the low turnover rate will last. So.
Okay, talking about the retention, since we are, as a software company in China, we are at pretty sizable scale right now, because we have 6,000 people, right? So relatively speaking in China. So it's a pretty big job for us to retain all the key peoples. And then we break down the people into type A, type B, type C. So for the type A people, actually, we pay extreme attention to those people. We offer stock options. We personalize career development plan for those people. And definitely also all kinds of team building exercise with those people. So those people, actually, the turnover is extremely low for us, around 5%. And in general, for our company, around 12 to 15%. So it's still acceptable for our business. But I like to, look at the HR issue from another angle. Because in China, as Kevin said, it's very hard to find a qualified middle manager and also senior manager, executive, etc. So what we do is like in Silicon Valley, you can pretty much cherry pick. The VC can help a lot of startups to cherry pick the best talent in the valley, right? But in our company, we cannot do it. So one way to do this is we adopt what Jack Ma, the CEO of Alibaba, said, called a Tang monk model. The Tang monk, basically, there's a famous monk called in Tang Dynasty. He went to the West to get India, actually, to get the Buddha script, right? And he assembled a team. They all have weakness, but they all have their own strengths and with the same mission and vision. So basically, we kind of like, we have to be a team players for all the major team member within our companies. And then we also try to do all kinds of group learning exercise, right? Everyone have their own weakness, including myself. So we try to set up a goal and then try to collectively work together to overcome those short weakness, etc. So that's what we are doing. And I think so far we have been doing good. Actually, we are working with Stanford Business School on a case study about our company on the HR side. So the case is pretty much done right now, working with Professor Rao. Yeah.
Great. Wow.
Thank you.
We hope that it will be one of the cases that's used to show success, right? Absolute success. You mentioned Jack Ma and that brings to mind one last question that I'd like to pose to the panel, and then we'll turn it open to the audience for the last bit of our session. And that is that here in many places, the role of role models is very important. Since we're here on campus, we could talk about Hewlett and Packard, or Jerry Yang and Dave Filo, or Larry and Sergey. But who would you point to who are the influential role models for the up-and-coming entrepreneurs in China? There have been many waves of entrepreneurs since Liu Chunzhi started Great Wall and many others. Who would be the people, if you could identify a few, that the entrepreneurs in China are looking toward, and they can be either Chinese or other, as their role models, people that are influencing sort of entrepreneurship in China? David, why don't you start, and we'll just go down the line, ending with Kevin, please.
Start with me? Okay. I think people look at both the global role models, including like Bill Gates and people, the two founders of Google, etc. And also the domestic role models, such as Alibaba's founder, Jack Ma. I think he has done a pretty amazing job, turned the company into a quite successful, innovative company. Other person, high-profile person, would be the founder of Huawei Technologies, because that's also a very innovative and also very global company right now. Their revenue is exceeding $17 billion last year, and according to the latest news, they generate the largest number of patents in 2008. Yeah, so that shows how innovative they are becoming right now. Okay, so those are the few people I can think about right now.
Great, thank you. And Frank?
I think for people who are more experienced in China, the founder and chairman of Lenovo, Liu Chunzhi, probably is a good role model, because he broke away from the old system. When Liu Chunzhi started Lenovo, mostly there weren't that many private enterprises, so he broke away from the old system, and he overcame great difficulties and had a huge success. I think Huawei's Ren Zhengfei, that was also a very good example. I think from the international perspective, I think Bill Gates sometimes is not viewed that kindly in China, but Steve Jobs is revered in China because he built this very cool phone and had huge success. And Chinese population had great respect for the producer of good consumer goods.
I would completely agree with Frank. I think the first generation of heroes was, people like Chairman Liu, and we have quite close relationship with Legend Group as well, and the CEO of Huawei. And I think those are the first generation, which is they're still getting aid from the government. I mean, even Legend had the original funding was actually government money. Same with Huawei; it's kind of really a spin out of exactly. And I think the second generation was a lot of the returnees that went back to China in the kind of the mid-early 90s to start the first generation of companies that went public. Sina.com, until Ding Lei at NetEase, and the founders of Sina, one of it, which is our partner at DCM, and I think then you had kind of the second generation, some of them that David mentioned, Jack Ma at Alibaba, certainly Robin at Baidu, and I think now you're seeing kind of the crops of the next generation. For example, some of the hot areas like social networking. So Pony probably over at QQ, and certainly Joe Chen at Xiaomi OPI. And what's really interesting about kind of the fourth is you're now seeing mix of people who are not the first generation relied on also selling to the outside world. For example, PCs for Legend, Huawei outside China. the second generation was a lot of returnees, and I think the kind of the new crop is kind of second generation domestically bred folks in China who never stepped out of China and who believe that the domestic market is good enough. And there's a lot of energy and vibrancy, and it's very different. And I think that's a true sign, I think, that the entrepreneurship in China is thriving and it's ready to really explode. That you don't need to rely on, a Western education or a Western market. That we can do it all in China by ourselves, and you only have to speak Chinese. And I think that's the real excitement that's going on now.
Those homegrown entrepreneurs focusing domestically. Thank you. Kevin?
Well, I would focus on, I sort of address the question in sort of two ways. First, the second generation of entrepreneurs in China, so the Robin Lees and Jack Ma. I think Jack Ma is a great role model. And then there's the whole list of people in the solar companies as well that have done really well too, not just on the internet side. But I'd rather address the question more in the second way, which to me, when I look at developing markets and entrepreneurialism and the successful startups, and one of the key ingredients for success is having those role models, whether those role models are companies themselves that have been successful or whether or not they're people that are identified with those companies. And China has a great number of them. If you look at the rise of Israel and that same thing, and people talk about the UK and whether or not they have any role models, and in Singapore and Hong Kong and things like that, and really China in a pretty short time, when a lot of, I remember traveling the world in the 90s, and people would always ask me how do you replicate the Silicon Valley model and things like that. And China really has had a number of entrepreneurs and companies that people can look to, the way that we looked at a Hewlett-Packard or an Ampex or Watkins Johnson or some of the really, or Varian, the really old companies that in the Silicon Valley that we used as role models. So China has a good history of those, and I think those are the things that are driving the people, as well as the fact that there's opportunity. So people look and say, I'm as smart as those people are. They did it. I can do it too. The opportunities are available to me, and as long as I work hard enough and find the right opportunity and create a service or product that's exciting, I can be there too as well. And that's a really great aspect. You need the culture behind it to support the risk taking, because there are some cultures, honestly, that don't support risk taking. Japan has long wanted to be like Silicon Valley, but they don't have a culture that supports risk taking very well, and China does. So I think that those combinations of things bode very well for China, which is why for at least for when I started after 20 years at Mayfield, when I started looking at what's changed about a new area outside Silicon Valley, even compared to Boston and Texas and San Diego, China ranks up there with the infrastructure and all of the things and the ingredients that can make it very successful. So that's how I look at it.
So the question is, what are the opportunities and perhaps challenges for non-Chinese entrepreneurs in China?
So for those of you familiar with Kayak, basically a travel site, we have a company called Chinar in China, and there's a Chinese and a Caucasian co-founder. Now, he happens to speak Chinese fluently and has been in China for quite some time. So, I think it's less about the color of your skin than it is about whether or not you understand the culture and can speak the language and have the networks. And he has.
I think obviously it's limited. And I think it also depends on the role you play. So, for example, there's been quite a few non-Chinese CFOs of Chinese public companies that's been public on New York Stock Exchange or NASDAQ. And that's, that makes a lot of sense, because, half of your job is interacting with financial institutions internationally. You got to deal with Wall Street all the time. But I think the biggest, the biggest ingredient that you need to find is, can you communicate with the rest of the team? And if you can, I don't think it's an issue. And if, now those companies don't come around very often, but there are opportunities. And if you go to Shanghai or Beijing, there's a lot of non-Chinese running around trying to be entrepreneurs, businesses. I also think it depends what your aspiration is. Whether you want to build a public company or have a chain of small retail stores and have cash flow and be happy. I mean, depends on what it is. You're obviously naturally limited, but I think the opportunities are there. Now the question is, are you better off there or here or somewhere else? That's something that it's a very individually based decision.
My perspective is as the following. We have Chinese and non-Chinese on our management team, and the Caucasian folks can speak Chinese fluently. But still, we find that his perspective of life and business is very different from ours. And I think that's actually a good thing, if done right. So sometimes this can cause tension and conflict. So that's up to the team to manage that and to respect each other. I've seen things gone badly. I do hope things turn out well for us. I think the key thing is the Western perspective of running business in China is very different. The Western trained people, they don't understand the culture. They don't understand the underbelly, the dark side of doing business in China. Sometimes the business is lumpy and not very predictable. So this can cause great anxieties for the Western trained people. But if you know the culture and you're willing to kind of work out the issues, be more patient, I think then we can leverage the strengths of both sides. When dealing with government, I think the government is a very interesting entity. The government officials, their interests are not necessarily aligned with the public's interest. Sometimes they have their personal kind of wants and needs, and so you have to entertain that. And also, if you use distributors, there are lots and lots of tricks that they play. So yeah. But we can go into details after this.
But let me add one perspective. All these so-called tricks have been done in the West as well. Okay, and obviously the West has matured or figured out a way to hide them better. Enron's a classic example. And so in China, is it more prevalent? Yes. And I can give you some public examples, like every media company that had a SMS mobile value-added services attached to it. They would literally, the minute a user signs up to something, they make him auto pay for a full year without their consent. Little things like that. Of course, they later got into trouble, but things like that just kind of go. It's just daily business, and those are the things you have to deal with. If you're a media company, you got to be careful about content, right? And if you're a strong believer in freedom of speech, you should not be in that business in China, right? Because they're going to ask you and reprimand you if you release certain kinds of content, and so you got to be you have to be localized from that perspective.
So the question is, as China's evolved into a market economy in the last decade or so, what has been the impact of foreign investors, foreign workers, expats, and
well, just a quick comment. The influx of foreign investment has, I think, spurred the entrepreneurial climate in China quite a bit. The Chinese government was both encouraging it and wanting it, and didn't necessarily know how to kickstart it themselves. And I think the venture investors and have done a lot in terms of pushing that forward. Likewise, the returnees and the expats going back. have also been a source of a lot of the great companies. A lot of them from the school. I mean, there's a clear connection between the Stanford GSB and some of the early internet startups in China. So I think it's all been very positive. Beyond that, I don't know if you asked also whether or not there's been an influence on the types of companies that have been started. I mean, a lot of the early internet companies were kind of Chinese versions of the U.S. companies. I think that's becoming less and less so. I mean, Baidu being a great example. I don't see that as a bad thing. I don't think I see that as just copying either, because Baidu had to be different in order to be better than Google in China, and Google didn't understand that, and Baidu did. So, I mean, they're the leading company. Likewise, eBay. eBay's made multiple forays into China, all unsuccessfully, and Alibaba's done a great job of understanding what the differences have to be, and you can name many examples down the road. I just want to compliment one of the things that Frank said. I mean, I think he said it very well. I think, it's interesting. I mean, we've had some examples of returnees that have been here for 20 years. I mean, educated here, worked at IBM or some other large semiconductor for 20 years and go back. Although they speak Chinese and they understand the culture, they're almost starting off from scratch because they have no networks, and they're almost as lost as I would be. And I'm a third-generation Chinese, born and raised in San Francisco, or actually Palo Alto. I think that I'm glad you asked the question, because you should not take away from here that we're only talking about technology. There are many industries that can benefit from taking what you learn about Western-style ways of doing business, organizing teams and leading teams, and enabling from below, and taking those and translating those to China. And I think that's what the compliment that I would give Frank, because he spoke to that very directly about mixing those two. You can't just have a Western-style approach in China, and I don't think you can just have a Chinese-style for a successful entrepreneurial global company as well. From my view, from the outside, China's used to a very, what I would call a patriarchal way of running a company, or a family way of running a company, where the person that's in charge is the chairman and runs the company, is probably the family patriarch and runs the company like that, and it's a hub and spoke type of business, as opposed to really a group effort and group collaboration. So I think understanding those, and I mean, people that have been trained here can take those, and you have to be just very intelligent about how to apply those, but keeping the Chinese way of doing things in life in mind, and I think you will be very successful. I always make a claim. My kids are 26, and if I were them and coming out of the business school, I'd go back to China, and I would, more about how to run a Western company and management than a lot of the entrepreneurs in China do right now. And so combining your backgrounds with that, either technology skill or innovation skill, or even if it's not in a technology area, is a magic formula, and I wish there were more of that.
I think each person is like a company. You need to know your, it's quote-unquote competitive advantage. I think the returnees, the expertise is very different from the local talents. For me, the last few years have taught me to be humble. I used to think I know a lot about China, but turns out the locals know more about the Chinese market than me. So we have to respect the local talent's strength, and also recognize their own weaknesses as well as our own weaknesses. The locals and the returnees actually mostly complementary to each other. So I would advise the returnees not going to the stronghold areas of the locals, like kind of building a supermarket or kind of consumer goods distribution, that kind of thing. I would prefer for the returnees to leverage their strength area. For engineers, for Stanford trained engineers, I would say do a software company, do a semiconductor company, not compete head to head with the locals. But I think the best way is, if you want to start a company in China, find a good local partner that you can absolutely trust. China is a low trust society. You have to find a person, a team that you can absolutely trust with your life. We have seen a lot of incidents that the partners, they split up because of kind of ethic issues. So be careful there.
Question is, what's the environment for seed investing in China right now?
It slowed down significantly compared to last year. And it slowed down probably post-Olympics. And the reason why it slowed down is I think a lot of the VCs kind of overinvested in '07, particularly in the non-tech sectors. A lot of the VCs have a lot of board seats now, and plus with the current economic environment, they're also looking at their wallet and saying, we got to stretch our fund, et cetera, et cetera. So it is less frothy than a year ago. Now, but this is all relative, right? Compared to Silicon Valley today, it probably is a better environment for seed capital.
GSR was, I wish I could say we were pressing it, but basically we were busy raising our third fund in 2008, and we didn't make as many investments, and so we're doing seed investing, and we've just done a couple of them. When you said specifically IT, though, too, I would qualify IT as IT you know it here, whether it's SaaS or enterprise software or hardware systems and things like that. That is not a big investing area in China. I wish it were, and I think it will be, but it's not currently right now. So just you said that, and I when I was talking about seed investing, I'm talking about a lot of other different things, not specifically just IT in that sense. But I think people in general have slowed down, and also too, what we would consider seed and early stage investing here in Silicon Valley is not done as much in China as it is here. I mean, there's fewer firms. There were a lot of opportunities in later stages that people were able to invest in companies that had bootstrapped and shown some type of either customer traction or product completion, and they had bootstrapped themselves. So that's the easier and the lower hanging fruit, basically. But there is some seed investing, and there's a number of Chinese entrepreneurs that do that. So I'd say the angel funding is actually pretty active.
Given the global economic crisis, is this an opportunity for Chinese companies to go global, or is it a time for retrenchment? David? Looks like
I think it's a great opportunity. So, David's company is doing software outsourcing, right? And many of the clients are U.S.-based. The current crisis in the U.S. is going to force a lot of companies to cut costs. And more are probably going to have to outsource to control the cost on a variable cost basis. I think more and more China is going to be a great place to outsource, whether it's semiconductor engineers or for software. And so I think there are always opportunities within this crisis. But, I think this premise that, a lot of Chinese startups and entrepreneurs were global in nature prior to now is kind of incorrect. I mean, they aren't. They weren't. I mean, many were very domestic focused. And I think it's really over the next 10 years, you're going to see, the equivalent of the Sonys and the Samsungs are going to come out of, and the Apples are going to come out of China over the next 10 to 20 years. And so I think, you're kind of really seeing the first chapter unfold. Now, I'm talking about, high value adding goods. I mean, of course, toys and, exports of manufacturing, just, commodities, China's very hit hard, and, it's probably going to slow down this year. But in terms of high-end value add stuff, I think it can only go up.
I'd say, in the 28 or 29 portfolio companies that GSR has, a few of them started off with global intentions and products that could be sold globally. We have one company that sells into the set-top box world and was global to begin with. I don't think this is a new opportunity for companies that originally started for domestic, Chinese markets to actually go global now, because they're just not big enough yet. They're not mature enough. That being said, if you were to change your question around, I think the larger Chinese companies that are established, and David's company would be, is already serves a global market. I think for those companies, there is an opportunity. I mean, I think you're going to see large Chinese companies like a Huawei and things like that go on shopping sprees, quite honestly.
Well, with that, I'd like to bring this session to a close. Please join me in thanking our panelists for their insights and comments for us today. Thank you.